Hello traders, Gary Wagner here. It is 12:04 in Honolulu, 6:04 in New York on Thursday, 28th day of July, 2022, and this is the Daily Report for gold and silver. Traders, what an exceedingly strong day for the precious metals markets, with gold and silver excelling in terms of their gains. Gold, and we're looking at the August contract, which will go out of sync, and the most active will become December, but August gained $34.30 or 2% and is currently fixed at $1,753.40. We did pull profits on our long gold trade. We'll talk about that in a second. It was silver that was exceedingly strong today. The gain itself was almost 7.5%, just shy of $20, with silver closing up $1.38.5 at $19.98.5 basis the September contract, and there was minor dollar weakness that aided fractionally to those gains. The dollar index lost 0.26% and is currently fixed at 106.055. Traders, as you know, we have been long from 1681. This first chart that we are looking at is actually reprinted from our local article on our members page, as well as our after hours column from July 8th. And if you recall, back during that time period, gold was trading at about 1740, and we were looking at different potential levels of support. The first level, and that's how I titled it, came in at around 1720. I based it upon a couple of lows, this low here, as well as this low here. But I also said that we had major support at 1678. That was based on a series of lows that we had seen over the last year and a half. The most prominent of those lows occurred on August the 9th last year, and that was the low of the flash crash. So that seemed to be a very logical point to look for major support. Traders, we are recording the chart section of this show at 12:20 in Honolulu, 6:20 in New York, which means Australia has begun trading. It is now Friday overseas, and the most active gold contract is now December. So I've had to go back to a August chart to illustrate this last trade. But most of our subscribers are well familiar with that. We talked about the level of 1678 being a major level of potential support. We based that upon a number of instances in which that was the low that came in and subsequent recovery occurred. In other words, during the flash crash, it hit that low but closed much above that. And there were two other occasions that we've talked about multiple times this month. We entered our trade on a limit order at 1681. We moved our stops up on a couple of occasions. Today, because we were coming within hours of expiration of the August contract, we took our positions to the market and we exited or closed the trade out at 1746. We bought at 1681. We got out at 1746. We made $65 per COMEX contract per ounce. We are now looking at a daily contract of December gold. You can see a gap between the closing price and current price. That is a reference to the differential between where August closed and the December contract is. On tomorrow's show, we'll talk about our prognosis for the next couple of weeks, but let me leave you with one thought. I believe that there is much more room to the upside. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.